Before we even start by anything, I want us to start off straight with market structure, because with market structure, you can't go wrong. This is the foundation of every single thing that you do. It's like being a Christian. Our foundation is Jesus Christ. Without Jesus Christ, we do not have Christianity. I repeat, Jesus Christ is our rock, He is our foundation. Market structure, market structure is your rock in this analogy. So let's start here. We're going to start with an uptrend. This is what an uptrend looks like on the chart. And currently, Bitcoin is in an uptrend. But folks, this don't look like an uptrend. This red, this don't look like, if I was to spread this out, this don't look like that. It's not going to always be this perfect. This chart right here, this black and white candles, it's not going to always be clean as the structure we just made. This is a perfect market structure. And in real markets, you rarely get this. As you can see, we are on our monthly charts, and we kind of got the same shape, but of course, not exactly like this. So this is where we have to use our brain to put two and two together. And that's why I'm here to show y'all how to do this. So look, of course, these charts, they mirror your everyday life. So think about your lowest lows and your highest highs in your life. Your lowest lows, whether that be death, a loss of a job, homelessness, this is your lowest low in a uptrend. Why? Because it's the lowest candle on the chart. This will be the lowest candle on the chart. So here will be the lowest candle in this situation. This will be this in this example. So our lowest low in life will be starting here. Notice that we won't stay in our lowest low forever in our life. Sometimes God decides to speed the process up. If we look towards our right, prices here, and prices went up to here, 24,200, and price stopped. Price went down. So this was here will be our highest high. So maybe in this example, we went from homelessness to moving into an apartment, but we still don't got no car. So yes, we grateful God then shot the price up. He then got us out of the streets. Now, we like, man, God, I know you could do it again. I know you could, if you got me out of the streets, I know you could give me a car so I can go to work. So days go by, and you're not hearing nothing from God. So from you being at your highest high, your emotions, you start to kind of think like, hey God, what's going on? Like, I need a job, but I know you just gave me a house. I'm looking for a car. So now your highest high emotion, you're going down, but you're not angry at God. You're not all the way, what I'm saying? Like, God, you have abandoned me. So here will be your highest low. Why would this be your highest low? Because this low here is higher than this previous lower low. So again, we were homeless. God ended up shooting you up to give you a house, but now you have to provide. Now God has to provide the income for you to sustain the house. So you wondering in your head, and the devil in your head, now you starting to decrease a little bit, but you're not at your lowest low as of homeless low, but you're just trying to figure things out, which is your highest low. So now God decides to give you a car, and now you back excited again, like, yo, he came through. My boy really came through. You feel me? So guess what this would be? This would be your highest high, right? So now you got the job and the car. Now, you feel me? You like, okay, what's next? Pops, you feel me? I'm just waiting, I'm waiting. And at this highest high, what was this price here if you look towards the right? Which is, so 37,610. So now you got the job, you got the car, you at your highest high. But then you notice at this job, you got a manager that just tweaking out on you, you feel me? So now you like, man, God, like, man, I appreciate the car you gave me. I appreciate the house you gave me. But man, I'm just on, I appreciate it, but shorty blowing me. Price went all the way from 37 to 22, right? So again, same pattern repeat, and this is all you doing, bro. So let's just say, you feel me, God, like, yeah, you feel me, I'm finna get rid of her. Not like that, but you know, move her to a different location. So now you excited again. You excited again, and I kid you not, the pattern continues. Let's do the reverse. Okay, so we're gonna start off with what? Our highest high, our lowest low. It's our lowest low on the chart. It's our highest high. You're gonna start those off. Your best times in life and your lowest times in life. So we're just gonna follow the pattern. We just gonna follow the pattern. It's gonna be our lowest low. This will be another lower low. Oops, sorry. Another lower low. And then what's gonna be at the top? We're gonna call this a lower high, not a higher low. This will be a lower high. When we're talking about a downtrend, we're talking about lower highs are being made in the market. Now in our analogy, right? Let's say, you know, we started falling off with God or whatever, and he ended up chastising us. So from that job we had, we ended up being managers since the lady left. Now, and we get a little sloppy, we start feeling ourselves dealing with pride, you know, like, yeah, God heard my prayers and got rid of the lady. So we like, yeah, we at our highs. But then God like, hey, now it's required more work of you to go deeper with me. And you like, okay, you go deeper, and he's showing you how, you know, whatever it is. Then again, you may get another promotion or whatever. He showed you something about yourself. So it's like, hey, God, thank you for showing me that I needed to clean my heart. And as he's cleaning your heart, he's also getting rid of the car he just gave you. So you like, hold on, Pops, hold up. Why you just get rid of my car? Because he's trying to purge you from the inside out. So now you seeing that and you understand what he's doing. So now you starting to be a little excited about it. Then again, now you probably lose your own. Like, Pops, I don't know what you're doing, but I trust you. And in between that season, he probably send you a man, probably send you a female. You feel me? So you like, okay, Pops, I don't got no car, I don't got no home. You feel me? But you send me a guy who could take care of me, or you send me a wife who could pray for me. And then both y'all get homeless, or both y'all lose y'all car. You feel me? So it's like the pattern continues. I'm gonna hope that ain't nobody's story, but I'm just giving you a visual of how I use the markets for my everyday life. And no, that didn't happen in my everyday life, but that the pattern continues. That's all it is. Market structure is the pattern continues. Now we established our highest high, our lowest low, and our lower highs, and our lowest low. Let's talk about support, and let's talk about resistance. Support, imagine support as buyers. Look at resistance as sellers. Resistance, push stuff away, push stuff down, or sell things. Buyers, support, hold up price. So remember, in every pattern or every downtrend or uptrend, there's a pattern. So let's take the same concept and start marking up our charts. And I'll explain to you why I did what I did. All right, we are back. Guys, do you see what I'm looking at? Right? So let's read this chart. This is what I mean when I say read the chart, right? Of course, we will never have a market this structured, this fine, this tuned as we see here in our BTC chart. It's not that neat. But let's use this for example. Let's read this chart. So from our highest high, and this is our downtrend, right? A consistent pattern of price going down from our highest high at 35, 36. If we're looking towards our y-axis, we're looking at our price, which is 35,365. I'm sorry, I said that wrong. And then our lowest low, which is 4,000. Of course, we see that's a big jump in price, right? Going on a downtrend. So let's read. From our highest high, price went down to what? 1780. Okay, so price went from 17,000 and shot up. This was the reaction from that. and then created a lower high. Why did price go from here to here? Because buyers entered in. So a lot of buyers in the market, a lot of institutional investors, they put a lot of money in the markets for this price to react from here to here, which created our lower high. So now buyers always need to take their buyers to sellers and sellers to buyers, because that's how business work. You need a customer. You want to sell stuff, you're going to need buyers. If you want buyers, you're going to need to sell stuff. So that's the relation between the two. They're always going to make a contact. They have to make a contact. Why? Because they have to create this pattern. Resistance, support, buyers, sellers. The exact same thing. They have to talk to each other. So this price has to talk to this price. So this lower low has to talk to this lower high. This lower high has to talk to this lower low. This lower low has to talk to this lower high. This lower high has to do business with this lower low. This lower low has to do business with this lower high. This lower high has to do business with this lower low. So going back to our first pattern, highest highs from 35,000, right? Then shot down to 17,000. Buyers kicked in. This price reacted to our lower high. Now from 17,000, we went to 29,000. Resistance is so strong here. Our sellers are so strong in the market. Remember, we are in an overall downtrend. So sellers are so strong in overall because it's a downtrend. So sellers are so strong. We are overall in a downtrend. But so sellers are so strong at the 29,000 mark that we have a reaction, a huge reaction this time. From 27 all the way down to 10,000. Because why? This lower high has to do business with buyers. Sellers have to go to the buyers. The lower high, the resistance or the sellers had to bring their products to the buyers. So we had a reaction from 29 to 2000. I'm sorry, for 10. Oh my goodness, I'm tweaking. Then now we have a reaction from our lower lows to our lower high again, because why? Our buyers need to bring something to the sellers and the sellers needed the buyers. So they did business, created a lower high, and then the pattern continues, y'all. This is what I want you guys to get out of this. This support levels is so strong because they have to get broken for this pattern to continue. If this pattern don't continue, then we don't have a downtrend. So let me go ahead and delete this so we won't get confused. So for example, now let's say let's create another downtrend. In this downtrend, we have our higher low, we have our highest high, our lowest low. Price reacted because buyers kicked in. The buyers kicked in, which made price go from 19 to 28, all right, 28,000. Sellers were so strong that it broke past the buyers. This is the key. I want y'all to, this is the key. Sellers were so strong that it broke through the support levels. It broke through the support levels. Sellers broke through this line of defense. Sellers broke through it. So what this is saying is sellers are so strong. Sellers broke through the support levels, the buyer levels. So once the sellers break this level, there's no more buyers here. So this is gone. So think about these folks right here, gone. These supports, they out of the, they cook. These folks cook. So it ain't no more buyers here. So if we looking, they're gone. These buyers are gone. Sellers are totally in control. Same thing here. Higher high, lower low, lower high. Sellers were so strong here, it broke through the support levels. Same here. From our lower high to our lower low, from our lower low to our lower high, sellers were so strong. It broke through our levels. It broke through the buyers. So the buyers is like, yo, you feel me? They so strong. There's nothing we could do. So we gotta make sure we gotta buy here. We gotta make sure we ready. We gotta make sure we ready for the sellers again. But the whole time, once they got ready for the sellers broke through that time. And that's what create our lower lows and our lower highs. Patterns. So if we was to, let's just say add on to this, what you think will happen? What you think is gonna be next? A lower high, And then what you think gonna happen? You think the seller's gonna win? Nope. What if I tell you they broke? What if I tell you they broke through the resistance this time? Huh? Yeah. So the buyers that was here at this lower low, they ended up being so strong that they shot up the price from 4,000 all the way to 22,000. And then of course money always have to come back down. Boom, boom, and then boom, right? It's a push-pull relationship between them. Sellers was winning, sellers was winning, sellers was winning. Now buyers then won. Because buyers then what? Broke through the seller's resistance this time. As soon as this happened, that's when we have a market structure change. That's when we have a change in character. That's when we have a market going from a downtrend into an uptrend. The pattern wasn't the same no more. It wasn't lower lows to lower highs to lower lows to lower highs to lower low to lower highs. No, it will end up being a higher high. End up being a higher high. You know, I use blue dance because we on an uptrend now. And then what we got? We're gonna have us a higher low. Why? Because it's higher than this low. And that's gonna be what? The same pattern, right? Higher highs and higher lows. That's all what it is, man. That's all what day trading is. I kid you not, that's all what day trading is. Now, let's mark up these. So we have our higher high, and then we have a higher low. Then price broke past this resistance. How do you know which one is the support and which one is resistance? Because remember, sellers always push stuff away. Buyers always holding stuff up. So in this case, sellers are always at the top. And then buyers is always at the bottom. And then the pattern literally just continues, just like we did the highest highs and the highest lows. I want y'all to do this. Actually, like, write out you guys' resistance levels and support levels, so you'll be able to physically see it. And by the time you continue to keep practicing, you won't need to do all this. So now let's read the chart. Let's physically read this chart from left to right, just like we were reading in real life. We are in a downtrend, correct? We were in a downtrend overall from this red mark. We are overall in a downtrend due to these patterns. All right, let's read. Our highest high at 35,900. We went from there all the way to our lower low, which is 17,000. Sellers were so strong at 34,000 that they pushed price down and made business with our buyers. The reaction from here, from our lowest low, was 17,600. Price reacted. Buyers went to the sellers again this time. They made dealings, and the sellers were so strong that they said, yeah, man, we're going to need some more of that. So we're going to meet the rest of y'all. Y'all broke through. We broke through. And we need to meet the rest of y'all because we like what y'all had, and vice versa. So now, lower lows. Price went from 10,000 to 19,000. The sellers were so strong here. The resistance was so strong that it pushed down, broke the support level of the buyers, broke through the resistance, broke through. They ended up winning right here. Right here, they ended up winning, going to our next level of buyers, our next level of support. Price went from 6,000 all the way to 12,000. Buyers were meeting our sellers. Buyers were meeting our sellers. They did business. And once business was done, sellers was so strong that it broke. Again, here is right here. It was when the sellers broke the support levels and went to the next level of buyers. Now, all these resistance levels, every single resistance level was so strong that by the time they got to this level of buyers, the buyers were so strong here. There was a whole bunch of people that entered the market at this time, and price shot all the way up from 4,000 to 22,000, and from 4,000 to 22,000. Here is where buyers broke the resistance level. Right here is where it happened. It broke through. Now our buyers from down here went to our sellers and did business. They did business here and went down. Support levels is at 1270. From 1270, the buyers needed to meet some more sellers. They ended up meeting at 33,000. Sellers like, hey, hold on, let's do some more business. Met with the buyers. The buyers said, hey, let's do some more business. And now we here at 58,000. So now let's just mark up our buyers and support levels. Of course, we always want to start with our lower low. We have our buyers at our support here. We have a red candle, then we have a green candle. But on mine, it's black and white. Then go to our highest high, which is here. We have 4 candles that is at our highest high. So we know that will be a resistance. Because why? We were on the uptrend, we have a green candle and then a red candle form, which is our ceiling resistance. Now let's go and mark up these charts just with what we know. So if we know that a red candle and then a green candle creates a support level, let's go ahead and start marking it. Always include your wicks. So right here we have a support level here. Price came all the way down here but ended up closing here. This will be our support. And what will also help as well is always follow price. So as we, like how we read the markets, how we read in real life, we start from left to right. So boom, price comes here, we see the green and red, comes up, resistance level here. Why is resistance here? Because price stopped, because we have a green candle and then a red candle. So therefore this is the ceiling. It stopped. It started from here and stopped here. That means sellers stop price. Hey, so we're gonna push it back down, which create a floor, which is our support level. This support level shot price high, which came to our second resistance level. Buyers broke through. From here, buyers broke through the resistance level here with this candle here to create our new ceiling, which is here because we have a red candle, a green candle, then a red candle, which is stopping price. This price from the ceiling shot price to the floor, which created another support level. And then what do we know about patterns? The only way a pattern continues is if something gets broken. So from this resistance level to this support level, we have price reacting again to another resistance level, which is here. Includes wicks. And from this resistance, it shot down to make another support level here. And also notice from this support level to this resistance, we created a lower high. So therefore the pattern changed from being higher highs in the markets to a lower high here. Price shot down to another support level. That's all it is. Why? Because we have a red candle, then we have a green candle. These red candle and this green candle stopped the price. That's the only reason that this price didn't continue to go further down. Without no support, the market will continue to forever go down. So we have to have a support. We have to have buyers say, hey, I need that what you selling. So from support, shot up to another lower high. And then from this lower high, we have resistance level. From sellers to resistance, it hit another low. So we have another support. Why? We have a red candle, then we have a green candle. Because price from the ceiling to the floor stopped price from continuing going down. So from here, price shot up, broke through the resistance here with this candle here, which created a higher high, because this high here that I'm marking is higher than this high here. So the pattern then continued. We made a new pattern here. So let's get this so you won't get confused. So from here, this is where we have the market changing from a downtrend to an uptrend. See, this is what we have here. This is the same structure here. We have it going up, down, up, down, up. So up, down, up, down, up. So we met the resistance here. Of course, we want to include the wick of these candles because this is the resistance, this is the ceiling. So we have our green candle, then we have our red candle. And then from the resistance, we have sellers pushing price down to another support level. And then the pattern continues. So from price, from the support, it broke through the resistance with this candle here, because candle closed above this resistance line. So this was our candle that said, hey, we are now moving into a uptrend. Now, same thing from our floor to our ceiling. Now we back in the uptrend. Now we have our up, down, up, down, up, down, up, down, up, down, up, down. Now, guess what? It didn't make another up or down. It made her down. It made her higher low. Boom, boom, boom. So now we are in a downtrend. Why? From this support, it didn't got broken. It was a change of character, letting us know, hey, sellers are now in control because sellers broke through this support level of buyers. Sellers are in control because sellers broke through the support of buyers. And we also have a lower high and not a higher low. So we got higher highs in the market right here and right here. For the pattern to continue, it has to be another higher high here. So from here, it should have did this, but it didn't do that. So from our higher low, we have our support level, red candle, and we have our green candle, which supports the price. And we're gonna put that right here. So from the support level, or the buyers, they push price from 50K to 108K. Then, of course, we have our resistance. We have a green candle coming upon a red candle, which shows a ceiling. So this means this price has to get broken for it to be a uptrend, which it did, which is why we have a higher high here. So from this higher high, resistance kicked price down to 75K to this higher low, which is our new support level, which is our new floor. The floor then pushed the price back up, made it a higher high, broke through this resistance, which made another resistance, a level of resistance. So from this higher high, we have a what? We have a change of character. Why? Because from this higher high, the resistance broke through the buyers. How do we know that? This candle closed below, this candle has to close below this level of support, because once that happens, there's no more buyers here. There's no more buyers in the market. The sellers then completely took them out with this candle here. So now that signal to us is going to be a change of character. This is what it'll look like when you label your support line once you get good. But right now, stick to support and buyers and stick to resistance and sellers. So I want you to physically see what's going on. Later, I want you to start marking change of character. And the only reason it's a change of character is because it didn't change the patterns from a higher high to a higher low to a higher high to a higher low. I don't know what happened to that right there. I'm sorry. From this higher low to this higher high to this higher low to this higher high. Then we're supposed to go to another higher low. But we have a lower low instead, which means the pattern changed. For it to be a break of structure, for it to be the same pattern, it's supposed to be a break of structure up here. But instead we have a change of character. So that's when you know we didn't switch from a uptrend to a downtrend. All right, and now with that being said, you guys literally have the blueprint. This is literally all you need to be a successful trader. I want to show you one last thing visually when it comes to breaking these support levels. They're called levels for a reason, right? So this support level got broken by this resistance, right? We could see that resistance pushed price down past this buyers, which gave us the change of character, which gave us a new pattern of lower lows and lower highs. From this lower low to this lower high, this lower low will push down and it's going to touch this level here. Since we already have a confirmation that this higher low created a lower low, we have a change of character, we should automatically know what should come next. A lower high to a what? Another lower low, because the pattern continues, right? So we could use this, is called a retest. So price is going to hit this line, then shoot off maybe above or even below. It just depends on whatever price wants to do. It could shoot up and then come back down to break this level, to go to this level of buyers. Why? Remember, I told you to do business, you need two parties. So this support, this buyers needed to go back to the sellers, to the resistance, to make an exchange. They had to do business. This lower high had to go to this lower low had to go to this lower high. And now, remember, the pattern continues to this lower low. So then what should we expect? A lower high. All right? And if the pattern continues, you have a lower high, and then you have your BOS here. This will turn into your BOS because price then broke through here. But this is the reason why I say it's called levels, so you guys can physically see it. All right. You have one level here from your very lowest low to a second level here, to your third level here. You said, where did that come from? It's just a visual way to see what's going on. That's all. So you have one level, two level, three levels. You have a lower low, higher low, higher low, higher low. Now you have another higher low. I mean a lower low, a lower low, and a lower low. They had to do business. They had to do business. So hopefully you guys understand what I just did and what I showed y'all. So this is how we mark up the charts, y'all. I will make another video making it more clear and more concise, but again, this is just my first video ever. I just hope this really helped you guys, and if it did, please like, share, and subscribe, and share this with somebody who really needs this or wants to learn. Again, this is my first video, so I'm learning as well how to be more articulate, how to be more precise, and to be more colorful with my words. I'm learning just like y'all, so just bear with me. And this is all you guys need in the markets. I kid you not, this is all you guys need in the market. Support, resistance, higher highs and higher lows, lower lows and lower highs. That's it.